So I think I found Wall Street's biggest secret. It's called the Medallion Fund, and it did something that shouldn't even be considered possible. It cracked the secret code of the stock market.
But they were very, very smart.
Yes, they got very rich.
Very, very smart. And,
very smart and very rich, yes. And very high grade, by the way.
Yeah.
In 1988, a man by the name of Jim Simmons and his company Renaissance Technologies created what is considered today to be the best investment anyone could have ever made, with the best track record of all time. And let me just give you an idea of how insane this is by giving you a comparison of all the different ways you could have invested your money back in 1988. Like, for example, if you took $1 and you invested it into the S&P 500, the stock market, today you would have roughly $40. Now, that doesn't sound like a lot of money, but that's a 3,900% return, which when converted into its annual compound growth rate, that's 11.8%, which is amazing. But there was something that was even better. He was called the Oracle of Omaha, and it was almost like he could see into the future and he could predict what was going to happen next. Warren Buffett. And if you invested $1 with him instead in 1988, that $1 would have left you with $152 in 2021. That's almost 4 times as much. It's a 16.4% compound annual growth rate. But there was something else that did even better. It was light years ahead of Warren Buffett, and that was the Medallion Fund. If you invested $1 into the Medallion Fund in 1988, by 2021, that $1 would be worth $40,000. That's almost a 4 million% return, which is a compound annual growth rate of 37.8% after fees and over 66% before the fees. And what this means is that this one fund outperformed the US stock market by 1,000 times. It outperformed arguably the greatest investor of all time by 263 times. And the craziest part about all of it is that the Medallion Fund is still around today. It's still doing its thing. But how it works and why it's so good and who can invest in it is still shrouded in mystery. And in today's video, I want to explain everything the public knows about it, which isn't much, but it's gonna blow your mind, so let's get into it. Hi, my name is Andre Jick. Hope you're doing well. Come for the finance and stay for one of the coolest things I've ever learned about. And it's all thanks to a comment that asked me to explain the Medallion Fund that led me down a rabbit hole of research, and here we are. So thank you for that comment. And I just want to say that this video is about to get insanely technical and nerdy, but I promise it's worth it. So in the 1960s, an economist by the name of Eugene Fama came up with something called the efficient market hypothesis. By studying the performance of thousands of stocks over 50 years, he came to the realization that there was no relationship between volatility and long-term returns. So in simple words, it just means whenever we open up our investing apps and we're scrolling through to look at which stock we want to buy, the prices that we see today reflect everything the stock market knows about itself. Meaning, there is nothing that you or I could figure out about the stock market that it hasn't already taken into account when it shows us stock prices. What that ultimately means, though, is that over the long term, if this is true, no one should be able to consistently outperform the market because the stock prices already include all the relevant information, both known and unknown. Now, Mr. Eugene Fama eventually went on to win the Nobel Prize in economics, but in 2019, Bradford Cornell from UCLA published a research paper called Medallion Fund, the ultimate counterexample? The counterexample that should not exist. Because this fund outperformed the market consistently for decades, which means this fund figured something out about the market that the market didn't know about itself. It knew so much more that $100 invested into it in 1988 would have left you in 2018 with almost $400 million. Those are the kind of gains that even Bitcoiners would be jealous of. And what's even crazier is that in that same time frame, the fund never had a negative year. The fund always made money, even when the stock market would crash. Like, for example, when the tech bubble of the 2000s lost people 22%, that same year, the Medallion Fund made over 51%. And during the 2008 financial crisis, when the stock market lost over 36%, it made 152%, its best year ever. So if I haven't convinced you yet that this Medallion fund defies all logic and it's doing the impossible, it shouldn't even technically exist, let me give you another example of how crazy it is. Because in that same 2019 research paper, they referenced something called perfect foresight. Let's say someone had the superpower of being able to know ahead of time at any given year when the stock market was up and when it was down and the bond market was up instead. And let's say you are able to use this superpower consistently from 1988 to 2018 for 30 years. You had a perfect track record. Anytime the stock market was up, you were buying it. Anytime it was down, you were buying treasury bonds instead. If you did that, you still wouldn't beat the Medallion fund, because that $100 investment would have only left you with $398,000, which is still less than 10% of what the Medallion fund made in that same time frame. And that is just insane. So the question is, how is this even possible? What are they doing and how could I get in on this? And unfortunately, I don't have the answer. In fact, no one really does. Even the employees at Renaissance Technologies couldn't really tell us because they are legally not allowed to say. There was no person that I could reach and no research paper that I was able to find on the internet that could explain how any of it works. Yeah, at this point in the video I was like, fine, keep your secrets then. But after watching every single Jim Simmons video I could find and all the research papers, I found a couple interesting theories that I think come extremely close to explaining it. It uses a couple different components. Russian components and American components. No, there's a couple key ingredients that are sort of the secret sauce. The first secret ingredient is the use of quant trading. It uses quant trading to predict the patterns and the future of the stock market. The second secret ingredient is the use of margin. It decreases risk and increases profitability through the use of leverage. And number three, it also is extremely cost effective. So if all of that sounded like a different language, let me just explain. The first secret ingredient is that the fund uses quant trading. And quant trading is the opposite of what you and I think of when it comes to investing. Like someone might say, I really like Tesla stock because Elon's gonna build several gigafactories all over Europe, which by 2030 could triple their production rate. And for the long term, that's great for the stock. And that's a mix of some sort of qualitative or quantitative analysis, and that's how most people think about when it comes to investing. But quant trading is the opposite. It's mostly short-term and it's all based on mathematics and data. And when I say data, I mean a lot of data, like terabytes of data per day, which then crunches through a computer that tries to predict the stock market by spotting what are called anomalies, which are sort of patterns of things that sometimes happen for some reason.
Commodities especially used to trend, not dramatically trend, but trend. So if you could get the trend right, you'd bet on the trend and you'd make money more often than you wouldn't, whether it was going down or going up. That was an anomaly.
Jim Simmons is the architect from The Matrix.
And that is why, Mio, you must smash the like button for Andre's video, because of the anomaly that is day trading. Now, some of these anomalies are obvious.
Sorry. So let me give you an example with a commodity like corn or wheat, which might be harvested a lot more of throughout some parts of the year and less so during other parts. So maybe the strategy is that you can short it in the months that you know it's going to go down and the opposite when it goes up thanks to seasonality. So that's one example of an anomaly or pattern. Another one that investors love to talk about is the dividend capture strategy. This is when investors buy into a stock on the ex-dividend date, get paid their dividend, and then sell the stock the next day. The idea is just to collect the dividend without holding onto the stock for long. The problem with doing these, though, is that you don't need a complex algorithm in a computer to figure this out. Everyone knows about these strategies, so in the long term, they're not extremely profitable. Real quant trading uses terabytes of data to find extremely subtle patterns that no human would ever be able to figure out. And that's one of its secret ingredients.
So they have to be subtle things. And you put together a collection of these subtle anomalies and you begin to get something that will predict pretty well.
The second secret part that makes up the Medallion fund is their use of margin. Rumor has it that the fund uses anywhere between 12.5 to 20 times leverage on its trades. Now, using leverage, I can use some of my money and I can borrow the rest. So for a $1 trade, I can leverage 20x like they're supposedly using, and I can turn this $1 bet into a $20 bet. Now, it is a lot more risky because there's less room for a margin of error. But if I can get it right, I can make a lot more money with my dollar. Now, you might be wondering, why would they need to borrow money if they probably have billions of their own? And why they borrow money is because they want to limit their downside while increasing upside. They don't want to risk their own nest egg because if their model ends up being wrong, they're going to lose a lot of money in a single trade. But when the model ends up being right, they can risk a very small percentage of assets under management, and they could still make as though they bet a lot more money while risking a lot less of their own. And it's also rumored that the patterns their computers notice are so subtle that only 50.75% of their trades end up being profitable. Think about that for just a second. With all of this technology and all the brilliant mathematicians they employ to put all of this together, that still only gives them a tiny edge.
But we keep improving it. We have about 100 PhDs working for the firm.
Now, in theory, this should discourage anyone from trying to day trade and get ahead of the market when you realize who you're actually competing against, but for some reason it never does. But this tiny edge is what makes a casino win. Rather than placing 5 to 10 big bets per year, their models will leverage their money over millions of smaller trades, and it's their tiny 0.75% advantage that makes their investors billions. Now, the third part of their secret strategy is cost effectiveness, because placing millions of trades in a single year is extremely expensive, and no single person would ever have access to the same kinds of price structures that they have. So whatever they're doing, it allows them to use their strategy in a cost-effective way. But to me, one of the most fascinating things about all of this is that according to Jim Simmons, he says that the most mathematically complicated part about all of this is figuring out how much money not to invest.
For one thing, there is a capacity to the major model. It can manage a certain amount of money, which is rather large, but it can't manage an enormous amount of money because you're going to end up pushing the market around too much. So it's kind of a sweet spot as to how much it's reasonable to manage. That last part takes some fairly sophisticated applied mathematics.
And that's why, if you're wondering how you can invest into this fund, the answer is you can't. In fact, no one can, because the fund was closed just 5 years after it was created in the year 1993. The only people that can invest are just a select few outside the company and the employees of Renaissance Technologies. But even for them, there's a total limit of $10 billion in assets under management. And that's because past a certain point, the strategy breaks the market. Like if we had access to an ETF that recreated the Medallion fund, the market inefficiencies would disappear and that fund wouldn't last for very long. That's also why they have to be extremely careful about not being too greedy. Because if you take that $100, invest it at 66% per year on average, which is what they've done, in 45 years' time, that $100 would be worth $1 trillion. But remember, they're not managing $100. They're managing $10 billion. And if you allow that kind of money to grow at 66% per year, it would grow into $1 trillion in just 9 short years. And if you allowed that money to grow for 35 years, which is how long they've been around, that $10 billion would turn into $500 billion, which is basically more money than all of the physical money in the world that exists today. At that point, influencing the market and giving away their secrets is the least of their concerns, because at that point, it would break the entire stock market. And that's why, for now, they keep it under wraps. It's the not-so-secret secret. But here's the thing, I kind of left out the most amazing part of this entire story. Even though this insanely complicated technology exists somewhere out there and it's making its investors billions right now as you're watching this video, the most amazing part is what its creator, Jim Simmons, had to say about it.
Well, the short talk is this. I did a lot of math, I made a lot of money, and I gave almost all of it away. That's the story of my life. Now, it's a good story, but it's short.
So that's pretty cool. If you want to learn more about this subject, check out a book called The Man Who Solved the Market: How Jim Simmons Launched the Quant Revolution. Also, check out all of his interviews on YouTube. He's got this amazing gift of explaining the most complicated things in the simplest ways, and he's really humble and he's amazing. Otherwise, have a wonderful rest of your day. Smash the like button, subscribe if you haven't already. Don't forget to grab your free stocks, links are down below, and then go track them automatically with the spreadsheet link down below in my Patreon. Love you, thank you so much for watching this video. I'd love to see you back here on Monday and Friday, sometimes a Wednesday. See you soon, bye-bye.